Good morning from Los Angeles. Welcome to Trading with Sergio Monday edition. We sure had a Bitcoin weekend, didn't we now? It kind of pained me to dollar cost average this morning at 120,000. At least I didn't pay 122 or 123. I think it got up to 123. So, if you've been following me for a while, you know my opinion about Bitcoin. You know what I've been saying about Bitcoin. This is not about being right or wrong. This is just about making the right analysis or thinking about it the right way of what's going on, as far as the government's concerned, as far as the administration is concerned, as far as fiscal policy, as far as monetary policy. It's all related. It's all related to what's been going on, the debasing of the currency, the U.S. dollar losing its buying power. You all are experiencing. It's called inflation in our, world. There's reasons for Bitcoin, what it's doing. I mean, a lot of people think it's a scam, and a lot of people think it's meaningless. A lot of people think and also a lot of people think it's digital gold, digital asset. You look, take it the way you want to take it. I am bullish on Bitcoin. I have been bullish on Bitcoin. I have not changed my opinion. I'm never going to sell Bitcoin. I'm going to buy every Monday, wherever it's at. I bought it this morning, literally an hour ago, in my Coinbase account. I buy it. I take it out, put it in my hard wallet or cold wallet, and that's it, right? Make sure your keys are safe, because if you do lose the keys for the cold wallet, your Bitcoin is gone. That's that gentleman in London, I think, or England. He had it on a thumb drive, and it got thrown away somehow. There's 800 Bitcoin in there. I mean, it's ridiculous. It's like $800 million or some ridiculous amount. So if you're going to do any of this, study what you're supposed to do. Do it with small amounts just to get it going. Meaning, if you're going to buy Bitcoin, buy $100 worth and then move it to your cold wallet to see if the transaction worked properly, and then you can do whatever you want. Bitcoin is 120 now. Last time I checked. I'm going to talk a little bit about a different topic, just one single topic today, as the headline of today's episode indicated. Should Jay Powell resign? President Trump thinks so. Pretty much the whole administration thinks so. I'm disagreeing with that. I don't think so. I think he's done a decent job, not a great job, but he's done a good job as the Fed chief. He was appointed by Donald Trump, and then Joe Biden extended the term. It's going to expire in 2026. By unequivocally, Jay Powell has said multiple times he's going to run out his term. But the administration is scrambling to lower interest rates. In fact, today, the 10-year note and 20-year note are going higher. The administration are smart people, obviously. Smart, Scott Bessent, extremely intelligent, extremely smart. He's been around the block multiple times. He's calling for lower interest rates. We cannot have lower interest rates when our debt is at $38 trillion. We just can't. And with the big, beautiful bill that we just passed, supposedly, I looked into it. I think the CBO kind of miscalculated it. They didn't account for the tariff revenue that's coming in, but that's going to be temporary, right? Without that, this new big, beautiful bill is going to add about $5 trillion to our national debt. Well, this national debt is made out of a bunch of IOUs. Basically, what we do is we have $5 trillion coming into the treasury, $7 trillion is going out every year. $2 to $2.5 trillion is getting tacked onto the national debt. The way we finance the national debt is we borrow. We borrow. Where do we borrow from? We borrow from the US pension plans. We borrow from all around the globe. Other governments buy our bonds and notes. So when you're borrowing and spending and keep adding, the next buyer of these notes, when they're due, which about $8 trillion are due this year to be refinanced, we cannot just ignore it and say, well, let's just wait to pay you back. When a note or a bond matures, the principal has to get paid back while you're paying interest all along. Well, the only way to pay that principal is to print more money. And when you do print more money, gold goes up, Bitcoin goes up. Why? Because you are devaluing your currency. There is more supply of dollars. And those supply of dollars are not going to wait or put it under the mattress, or they're not going to just wait to see what happens. They're going to go invest. They're going to chase return. And that's what's happening. Not that Bitcoin is chasing return, or gold at 3,200 is chasing return, or stock market at an all-time high is chasing return completely. There is merits for for these things to be at all-time highs, but the biggest factor in all of this is us printing and spending non-ending. That is the reason this is happening. I've talked about this since I started the channel over a year ago. We keep deficit spending. This is what you should expect. If we had cut the deficit, if Doge had done its job, if Elon was still around and trying to do a good job, maybe Bitcoin wouldn't be at 120 because we didn't have to print, right? We can balance that budget of ours. Well, we can't. I don't think we will ever do that, because now the the horse is out of the barn. We can put the horse back in the barn. We are a spender society as a government and as people. We love our plastic. We spend on it. We buy things we can afford to buy. We live on credit. But again, I'm not saying credit is bad, but there has to be sense and sensibility in all this. So, but going back to President Trump is calling for 300 basis points lowering of interest rates. Look, I'm sure Scott Bessent is talking to his ear and saying, Mr. President, this is not going to happen. And I personally think it's definitely not going to happen. But what I think is necessary is them kicking the can down the road gave a clear indication to the bond market that nothing is going to change. We're just going to keep deficit spending. We're going to keep adding to our national debt. All we're going to do is kick the can down the road. The next president comes in, the next administration comes in, they do the same thing. This is not a Republican or a Democrat issue. Under both parties, both administrations, the debt has gone up equal amounts. And we can't return at this point. That's the way I feel like it. At 38 trillion to be 40 trillion by the end of this year. So what happens? The new buyers of this debt that we have to issue, not only we have to refinance the existing maturing debt, but we have to issue new debt. Well, those buyers are going to request or require a higher return. That is why the bond market, which cannot be controlled by Jay Powell or the Fed or the administration, it is so big, it's so gigantic, into the tens of trillions of dollars. That includes U.S. treasuries, corporate bonds, municipal bonds, foreign government bonds, because all governments are doing what we're doing. Japan is doing the same thing. Their debt to GDP is 220%. China now is doing the same thing, fighting deflation by just absolutely increasing their money supply. And if you look at the money supply, which I put a video last week, you guys can go check it out. There is a direct correlation between global money supply, which is called M2, and what's happening to Bitcoin, what's happening to gold, what's happening to stocks. When there is this much money sloshing in the washing machine, which is created out of thin air, how do we create the $2 trillion deficit that we have between our income as a treasury and the spending? We just put zeros to the ledger, and then we just put the dollars out there. Well, those dollars are going somewhere, right? So it chases return, and this is what happens. But yeah, I don't think that, we're past the point of no return at this point. I don't think we can say, okay, well, let's just have some fiscal discipline, and monetary policy will follow that this fiscal discipline. So basically, I find Jay Powell not at fault, but President Trump and the administration is making him a scapegoat, right? Sacrificial lamb. It happens in Washington all the time. Somebody has to get picked. And, they're pounding on the poor guy. What they're doing, I mean, he lived through a pandemic. I think he did that pretty well, although that started the whole ball rolling. Although this goes back all the way to Bernanke days. This goes back all the way to Greenspan days. All these Fed chiefs love throwing money out of the helicopter. But then it all started in 1970s when we went off the, gold standard during Nixon times. You guys need to study history of deficits. And, we just borrow and spend. That's what we do. And it's going to catch up. No, I'm not smart enough to say when it's going to catch up, but I'm smart enough to figure out that I need to invest and I need to save in hard assets, because those are the only things that's going to keep your money safe. You looking at $100 bill today and thinking it's still the same $100 bill as only 5 years ago, you're sleeping. You're sleeping at the wheel. It's not. So the only way to protect yourself from the debasing of the currency, the devaluation of the currency, the US dollar becoming toilet paper, which I'm going to show you guys in a minute, is by investing in hard assets. Let it be stocks, let it be Bitcoin, let it be gold, let it be whatever it is. But you have to do that to protect yourself from what the government is doing. Again, this is both Democrats and Republicans. These people have not seen a dollar they don't like spend. They love our tax dollars. They take it, they squander it, and on top of that, they borrow another $3 trillion every year, and then they spend that as well. Well, you just find a way that works, and that's why Bitcoin is at 120, gold is at 3,200, stock market's at an all-time high, and they're going to keep going higher, because I don't think they can pull the chair now. I don't think they can take the chair out of musical chairs. I don't think they can now. All they're going to do is just keep adding, and the markets are seeing this, and justifiably so. So, and I've been saying this for a year. If you're following me, hopefully you bought some Bitcoin, hopefully you bought some gold. That's the way we're going to go until somebody with some sense and sensibility says, no, we need to balance the budget. We need a balanced budget amendment. We need zero-based budgeting. We need something, right? Well, I don't think it's going to happen. I had high hopes for this administration to do so. They came in with a big talk, and then no, what happened? $5 trillion more coming into debt with the big beautiful bill. So who's to blame? Well, it definitely seems like President Trump is blaming Jay Powell. There they are. There are the two amigos. President Trump is calling for a 300+ basis point rate cut immediately. President Trump. I mean, that's not going to happen. So this will be one of the largest market moving Fed actions of all time. It does not matter if you guys cut 300 basis points. Tomorrow, the Fed has cut the rates, the Fed funds rate, by 100 basis points. What has happened to the 10-year note, 20-year note, 30-year bonds after that 100 basis point rate cut? They have gone up by 100 basis points, completely the opposite. The bond market is smelling it. The bond market is saying, no, there are bond vigilantes out there. They're going like, nope, we're not buying any of this that you guys are selling. And the bond market, actually, if they did cut the rates, I think the interest rates are going to shoot higher, without a question. The real interest rates, not the Fed funds rates, and the real interest, and your mortgages and your car loans and your credit card debt is all attached to the 10, 20-year note. It's not attached to the Fed funds rate, what the Fed is doing. Fed cannot do anything. So President Trump now is calling for a 300 basis point. Lowering interest rate is already anticipated by what? So on the right-hand side, you guys will see this is a 1-year chart of the US dollar index. It's against a basket of currencies. Look at that chart. Look where we are. It's down 11%, the US dollar. So literally your $100 bill just lost 11% of its value that you're holding in your pocket. But if you were in Bitcoin, if you were in gold, if you were in stocks, if you're in hard assets, real estate, right? You would protect yourself from all that. And the cutting of rates by 300 basis points is going to accelerate the dollar becoming toilet paper, literally. Okay. Now, you're going to say, Serge, this is only short term. What do you think about long term? Don't you think that's going to affect the economy in a positive way, lower interest rates? Yes, it will. But do we need it when all assets are already at all-time high? You do that, what's going to happen is that money is going to come out of bonds. It's going to go into these assets. We're going to have a melt up. And I agree with Tom Lee, what he's saying of Fundstrat. He's been saying this for a long time, and he's seen this picture. He's seen this movie. So have I. And I agree with him. And interestingly, if you look at the dollar long term, so this is on the left, it's a 5-year chart of the dollar, right? Because we had raised interest rates from 0 to 5% to combat inflation, which is right here from 2021, right? When you raise rates, dollar gets stronger because people come and invest in bonds and stocks in the US. So what happens? They come and convert their own currency to US dollars. That means they have to sell their currency and buy US dollars. Dollar gets stronger. Well, now the dollar is saying, okay, but these deficits in debt, national debt is no good, right? Rates are, if you guys cut the rates, the dollar is going to go lower. So the one on the left is 5-year chart of the dollar. The one on the right is a all-time, as far as these charts go back, of the US dollar index. Now you're going to say, well, see, if you put the longer term picture, it doesn't look as bad. Yes, granted, it doesn't look as bad, but in one single year, dollar losing 11% of its value is not a joke, right? So if we do cut the rates now, the dollar is going to lose more value, accelerate more losses. And what's going to happen? Gold is going to go higher. Bitcoin is going to go higher. The stock market's going to go higher. So it doesn't make me bearish on any of these assets. What it does actually, it kind of confirms that what I've been saying, the dollar is losing value. It's going to keep losing value, especially if we cut the rates by 300 basis points, which I absolutely don't think is necessary. But then if they get rid of Powell, because he's kind of holding strong against that, the president's wish and the administration wish that we need lower interest rates. We need lower interest rates because we have $38 trillion in debt, and $8 trillion of it needs to get refinanced this year. We need lower interest rates more than the consumer. The U.S. government needs lower interest rates, period. The reason? Again, $8 trillion worth of bonds and notes and short-term notes are going to have to be refinanced, which we had issued 5 years ago, 10 years ago, 20 years ago. They're all maturing. Like I said, we can't just say, nah, we're just not going to pay you back. No, we're going to print more and we're going to pay those. On top of that, we're going to have to pay higher interest rates because the going rate in the bond markets is way above the Fed funds rate. So we're in a pickle, right? But if you keep kicking the can down the road, if we keep increasing the debt, and that's what the expectation is, and that's what's going to happen. It's pretty simple, really. I mean, it's really not that hard to figure all this out. And that's why, you need to save in hard assets. Forget about this. Let me put my money in a money market fund or something. It's not going to be enough, right? It's not going to be enough. So Jay Powell, is he going to resign? If he does resign, I think you will get a massive negative market reaction, meaning the bond market will shoot interest rates up. I don't know what will happen to stocks. Short term, they'll probably sell off, but long term, there's so much money out there that it's impossible for these assets to go down at this point. It really is, unless the printing completely stops, which we know is not going to happen because we have to print. And we have to pay these IOUs back and then issue new ones with higher interest rates. And when you issue ones with higher interest rates, then what? The servicing cost of this $38 trillion is already at $1.2 trillion last year. This year is going to be $1.5 trillion. Trillion, just the interest. Just like your credit card balances. If you keep carrying those credit card balances, you will have to pay that 30%, right? So that's where we are, like it or not. And that's why all these asset classes are doing what they're doing. So, that's my topic of the day. I'm going to go to my positions. I'm trimming quite hard, actually, but my members know it. I post that. So Cosmo Cameron is a new member. Welcome to, I think you emailed me, and I think I did send you the Telegram chat group link. Please go grab the link and then introduce yourself in the chat group. So what am I talking about here? I have a members group besides the regular channel subscribers, obviously. We have a Telegram chat group. If you do join as a member, you get my trades live, which I post immediately as soon as I execute. Again, none of this is trading financial advice. It's for entertainment purposes only. Once I post them, it's up to you to do what you're going to do. What I do is extremely risky, but the rewards are extremely high for me. I know what I'm doing. I know how to risk manage. I know how to money manage. If you don't know any of that, don't do anything I do, because you will blow an account or two, especially if you become stubborn and not take losses. And I will, I'll show you guys that I'm taking losses this morning, and I have to. And when things get to a point that I need to take a loss, I'm going to take a loss. I'm not going to complain. My account's up about 62, 63% for the year as a six-figure account. I'm very happy about it. It's 10x of what the S&P is doing. I'm grateful, but that's because I manage hard. I don't mess around. I don't put my head in the sand and say, "Oh, well, it'll be okay one day." And just no, we don't do that. We're trading. We're not investing. Trading and investing, completely different stories. I buy stocks. I hold stocks. That's a completely different story. But if you're trading, if you have an actively traded account, you need to do all these things. If you don't do it, and then you're going to become a long-term investor. I met a lot of people who start as a short-term trader and then become long-term investors. And they'll be looking at the same stock. Think about the opportunity cost that you're losing, right? Because you're stuck in something hoping to break even at some point, and it doesn't. Then what? You're just sitting there while everything else is flying around. Well, I don't like that. And so if you do become a member, you will get the Telegram chat group link. You will get a live stream every Wednesday between 4:30 and between 3 and 5 p.m. Pacific. That's only for the members, where they can come on and we can do a face-to-face kind of an interaction, or a little bit, individual hand-holding, let's say. And obviously you can get the replays of that. If you miss it, no big deal. And that's what the members get. So Traveler, hello. SJ, hey, how are you? Manny P, good morning. Mojo, good morning. Proud of Mojo. Mojo is doing well. Luis, good morning. I think the chat group is doing well. We had a little bit of a tiff on Friday. I actually got disappointed with a few of the members that they go like, "Yeah, it'll be fine one day." I'm like, "No, we can't do that. I guess I'm not teaching you guys enough, but we will take care of that on Wednesday." It's a little family quarrel we'll have going. But yeah, that's what you get as a member. And let's go to the position. So I'm going to do this weekly. So Monday, Tuesday, Wednesday, Thursday, I'm going to go live around 10 a.m. for about a half hour, 45 minutes. I'll even actually, let me put the link up if you guys want to come on and show your pretty faces. And here's the link. Here it is. If you want to grab the link and come on. There you go. This is what I want to hear. This is what I want to hear. Yes, doing good here with all-time highs. Account equity highs, right? That's what we're talking about, not the stock market. Because if the stock market is at an all-time high, and if your account equity or net liquidation or net worth is not at an all-time high, you're doing something wrong. You should keep pace, right? But what am I doing? Yeah, so let's go to the positions. Let's remove this. Okay, so hopefully you guys can see this. Yes. Okay. So I'll go through the positions real quick. If you guys have questions, please put it up. If you want to show up, please grab the link and show up. StreamYard changed all this. I don't know. We had some issues with it. I guess they updated the software. Let me see how I can do this. Yes, beautiful. See? This is what we want to hear. I want to teach you guys how to fish. And I am. I will. And that's the only way to survive this madness that we have with the deficits and with the debasing of the currency and your dollars becoming toilet paper. People tell me, like, Serge, what are you talking about? I go, yeah, we're just like Venezuela with a printing machine. Nothing different, really. Some people agree, some people disagree. Anyway, long story short, where are we? I added to my AAPU calls, which is the 2x ETF of Apple. I own 50 of them at 79 cents. They're 70 cents. I'm about to add to Fuel Cell. Stock is 511. I'm buying October. I'm short 10 of the August 6 puts, which I'm willing to get assigned. I sold them at $1. I'll buy 1,000 shares at $5. 6 minus 1 is 5, obviously. If I don't get assigned, fine. But it looks like I will because we're deep in the money there. I have 70 now, October. Now I went out to October 5 calls, at the money calls, or a little bit in the money calls. I have 70 of them with a cost of $1.16. They're about 90 cents, 95 cents. I am long 20 SMCI August 60 calls. I am short 2,000 shares of SoFi. That stock has done nothing but go up, but it's fine. I will hold to my shorts as a hedge. What else we have? Soundhound trimmed some of the short puts this morning. Stock sold off a little bit. That's when you take small losses, and people just don't understand. They go, "Why are you taking losses? It'll be fine." I'm like, no, I take the small losses. I don't want to have too much of a drawdown because when you're short puts, you guys know what can happen, right? So on that one, by the way, I've posted all the positions on the community page of the YouTube channel for all the subscribers, regular subscribers, every Monday, Wednesday, Friday. And you guys can go check it out, follow it there. Although there's a lag, obviously, there. So again, none of it trading or financial advice. Be careful with all that because there's a lag between the time I do and execute something and I post it, but the members get it live, and members get my current position at the end of each day, right at 1 o'clock when we close. So Soundhound, I am short 20 now. I was short more. I'm short 20 of the 13 puts. I was short 30, and I was also short 12 puts. I covered the puts, reduced exposure. With the credit I took in, I had gone and bought a call debit spread. I bought 15 calls and sold the 22 calls. In fact, I'm going to go buy the 22 calls back because they're up about 50%. So let me put an order there at 30 cents. I sold them at 62, 35 at 30 cents. Okay, that's my bid. I was long 15 SPY, 620 puts. I'm down to 5. I trimmed them with profits this morning at the week open. That's what's happening. Market's opening week. Nobody's listening to the tariffs, doing this and doing that. And then, they're buying the market, buying the dip. So when you have an opportunity to make money on index puts, you take it. I'm down to 5 from 15. I actually like this position quite a bit. In fact, I'm going to add to it depending on where it's at. TSS Inc. I was short the stock at 31, covered at 26, went all the way down to 19.5, which is the 50 EMA. I started, putting on a synthetic. I'm short 10 of the August expiration now, 20 puts. I'm long 10 of the August 22.5 calls, and I'm short 10 of the August 30 calls. That's a synthetic, folks. So synthetic meaning you're short puts, long calls, but you take the money from the puts and spend some of it on a call debit spread or a call. You guys will have to figure it out. I mean, I've explained this 1,000,000 times to my members as well. Basically turbocharges. So yes, I am, let's say, cash secure puts, but then I want to make money if the stock does bounce. And right? It's turbocharges basically everything that you're doing. It could be a double whammy though. It could be double wrong or double right. So to me, important thing is to do it when the stock is at a point that you should do it. And on this one, it is the point. So let me try. I'm going to try to go add. I don't think the price is there, but let me see if I can add to this. Not July, August. So sell the 20 puts, buy the 20 calls, sell the 30 calls. Dollar credit. Yeah, let's do it at a. I did it at a dollar credit on Friday. Dollar credit will do what for me? Let's see. I'll own the stock at 19 August. If it's below 20, I'll take it. I'll do 5 more of those. Yeah. Wow, the requirement is so high on this. 10 grand to take $1 in? A dollar credit. Let's do it at a little bit higher than $1. I did it already at $1. Let's do it at $1.15. Okay, that order is in. And I was long 3,500 shares. Now I'm only on 2,000 shares of WeRide. Average cost 777. Stock is about 865. So a couple thousand profit there, no problem. I still am long these 5 index puts. I will hold those for a hedge. I'm short SoFi. Stock is up. I will hold that for a hedge. Earnings are coming out on SoFi. I'm quite aware of that. I'm just pumping the stock. Soundhound, yeah, we're good. We should probably close those calls if it's going to run. Yeah, I'll close them when the stock pulls back. These are September, adding to fuel cell. Yeah, that's about it. Excuse me. I'm very interested in, let's go through a couple of charts. I'm very interested in being long gold or participate in the gold breakout, but let's go through the charts real quick. SPX. Yeah, just new all-time highs. I mean, what is there to say? Right? Don't argue with the markets. If you're buying puts, do it at a time that you can grab a 50, 80 cents dollar out of it and get out. Don't just buy puts and hold puts because they're going to expire on you. This is the SPY. This is triple Q. Yeah, I mean, what is there to not liking about any of that? I'm adding to my Apple. That's just Apple. AAPU is the 2X ETF of Apple, so I'm adding to those. Fuel cell I'm adding to. I think pull back to support here on very low volume, which is fine. I'm just going through the position. So what else? SMCI. I mean, it's doing the right thing. I was expecting actually a melt up when that broke out of that long-term consolidation period, but we'll see how it goes. I'm long 20 calls. This is Soundhound. Yeah, it had a downgrade this morning, and also not only had a downgrade this morning, Facebook bought a competitor of theirs. I thought actually it would be positive because the Facebook paid $3 billion to the competitor of this company. I like the chart. It's okay. It pulled back to the middle band actually after opening up the Bollingers. So I'm okay with that at the moment. It'll depend what it does, but when the stock goes from 13 to 10.5, and you have your short puts and you have small losses, you take those small losses and you let everything else go. Because I don't want to look at this at 8 and say, oh, I shoulda, woulda, coulda. What else? We looked at SPY. Okay, this is TSSI. Like I said, I was short the stock. Like you guys can see the labels here. And now I'm long the stock. It came literally tagged the 50 EMA and bounce, which I thought it would. And that's when I put the position on. This is SoFi. I'm short 2,000 shares. We'll see. I think we're about to top here, somewhere around here. So as a balance, you keep that together. What else? And this is WeRide. been trading it for a couple, 3 months now. Let's talk about Bitcoin. IBIT is the BlackRock ETF, new all-time high, although I think it's pretty close to the top. BITX is the 2X ETF of IBIT. Beautiful, beautiful charts. Gold, I'm expecting a little bit more consolidation, but we're going to trade NUGT. My structure of my trade is ready. I'm just waiting for a breakout. I have my lines drawn, which I don't like drawing, but I think gold's next leg is going to go much, much higher here. This ascending triangle or a wedge pattern, it's consolidation. Breakout of this will create, my measurement is 2,700 to 32,500, so probably about 3,800 in gold. And then, as much as President Trump is talking about lower the interest rates, this is the 20-year Treasury notes. Look where they are. Interest rates are going higher. Interest rates went higher last week. Folks, wishing for it is not going to get you there. Bond market is too big to listen to the president or the Fed. The bond market's going to do what it's going to do. Let's look at a couple of interesting names. Tesla. I mean, we're just going sideways. We're consolidating here. If you're going to trade, I mean, a lot of people love Tesla. I like the company. I actually like the stock. I don't like the stock. I like the car. I love Elon. I think he's a great man. People like that are necessary on this planet. Let me extend this trend line to the right. Okay, while I'm at it, it's just consolidating. I mean, is it one of these, right? Is it going to do one of these and take off and go to 400? Potentially, but we'll play the breakout. I'm watching a couple of stocks for bullish divergences. One is Lululemon. On a lower low, I'm watching for the MACD bullish divergence to develop here. I would like to see a lower low on that. In my long-term account, I'm long 4 stocks, but I'm thinking of adding one more, which is this one here, Lululemon. I'm long Unity Software, about 21 range. It's about 29.5. I'm long Google, about 143. I got lucky, bought all these stocks the right way. These were the stocks I wanted to buy. I'm long Nike, and actually Nike is pulling back to the 200 EMA that it broke out of. That may be a good trade there. Yeah, I'll probably take a look at that. And and then I'm long Kava. Yeah, I bought that about 73, sold actually puts that are expiring this Friday. At the moment, they're probably worthless. I sold the 75s on the stock pullback. What else? If you guys have any questions, please put them up. I'll answer it, and then I'll say goodbye. And any other stocks that I'm thinking of participating? Lemonade, I really like quite a bit. It's pulling back. Yeah, it's right on top of it now, right into support right here. So we'll probably put a trade on Lemonade. It's an insurance company, by the way. It's not a lemonade stock. What else we got going? Let me look at my trade or watch list. AMD. Beautiful chart, really. ASTS. Rocket Lab. Yeah, it just came right into support. I was short the stock, as you guys can see by the labels. I made money on that. I was short Sezzle, covered early. Yeah, that's coming into support too now. See, you're short some of these things, but then you reverse when it gets to a point that you need to be long, so you can't just be stuck with it. I like the Chinese names. They're in a deflationary cycle. They're pumping money like crazy. I like Baba. I like Billy. Yeah, I like those too. Of course, MicroStrategy, or Strategy it's called now. So where's everybody that was calling Michael Saylor being a Ponzi artist? I don't hear them, do I? Any pullback now. Bitcoin is going to 140 on this leg up, I'm pretty sure. Please watch yourselves trading MSTR or MSTU. You got to watch something called MNAV. I've been trading MSTU for a year now. Successfully, I might say. Oh, Circle is moving back up today. Found support right at the 20 EMA. Look at that. Okay, and core weave probably found support as well. Oh, it's up 8.5. Okay, and I found support right at the 50 EMA. So you guys, I mean, look, I'm not a huge chartist, but I do pay attention. I'm not going to ignore it. I'm not going to ignore the power of millions of people watching the same damn thing. And one of my members is super high on Neo. It's been going up last 3 days in a row. Let's take a look at that one. 404, yeah. Hey, the resistance at 200 EMA. There's big talk. I mean, I was long on Oscar Health. So much talk on X going on Oscar. I don't know. I mean, it found support at 14 where it should have. Next support is about 11.5, 12. Little dead cat bounce today. I don't know. Honestly. Just trade what's in front of you, man. Don't create biases for yourself. Oh. What else we got going? I like Reddit quite a bit, actually. Yeah, that came and kissed the 20 EMA middle band and turning up. The Reddit, Lemonade. Yeah. So you have to have a watch list. So when they get to you, do it. Right? That's it. That's all you can do. And then, wait for your setup. Don't be rushing. No need to rush. Let the market come to you. Tesla we looked at. Yeah, that's about it. Yeah, I'm watching for Lulu. Definitely for a bullish divergence developing there. I would like it to make a lower low below 220 and MACD not make a lower low because this pullback here is on very low volume, actually. Yeah, I think that's going to be a great trade. What else? That's about it, folks. So those are the positions. Let's look at one more time. Okay. SMCI fine, SOFI fine, SOUN fine, it's our bid. TSSI 21, okay. Yeah, we're not going to get that 125 or 115. That's all right. I have 10 of them. I'll probably add to it. Anyway, okay. That's where we are. All right. Anybody want to come on? Anybody? Grab the link. Yeah. I wouldn't call it crypto money. If you just go watch a couple of the videos I put up. It's not mania, man. There's a reason for it. I've been saying it for a year, but I own Bitcoin. I only own Bitcoin. I hodl. I don't trade. I trade the other ones, MSTO, MSTR, MSTX, things like that, or IBIT, BITX, but I hodl Bitcoin. I've been DCAing every Monday this year, and the original purchase of my Bitcoin was in 2020. And it's grown to the point that it's an appreciable part of my portfolio now, but I'm going to keep buying like Michael Saylor. Every new high, I'm going to keep buying. There's reasons for it. It's not mania. The rest of the stuff, Ethereum and Solana and XRP and things like that, I don't know. I can hardly figure out Bitcoin, but I'm a huge believer in Michael Saylor and what he's doing. Any thoughts on Oscar? I just said it. I mean, look, there's a lot of pump going on X, right? A lot of people are holding the bag on that. They all bought into the high 20s or mid 20s or 18s, down to 14. A couple of analysts, very credible analysts, came out and put some nasty price targets on that. I was long with a synthetic, made a ton of money last month on Oscar. I was short 15 puts, long 15 calls. Then I rolled them up to the 20s and then moved up. At some point, I goes like, this picture is not right. And then the Big Beautiful Bill has a problem in it for Oscar. I'm not sure yet, fundamental side. Technically, it looks like shit. Fundamentally, they may have problems because their biggest source of revenue in the customer base is in Medicaid and through ACA, the one that Obama passed, right? So if the credits for that are going away, they may lose some customers and they may not gain new customers. So there is a lot of talk going on about this. These two major analysts, Barclays and one other house, came and downgraded the stock and put a $9 and $10 targets on it. Look, X is X. They're going to just go say whatever the fuck they're going to say. Oh, this is the next generation wealth building bullshit, whatever. I mean, look, they're either stuck or trying to get out or whatever. I don't really pay attention to those things, but I just trade what's in front of me. Fundamentals are a little shaky technically. It looks like shit. So, yeah, I mean, I'd rather not commit my dollars to it at this moment. I'd rather have the, dust settle a little bit before I do anything with it. Pfizer, yeah. Pfizer chart looks interesting, actually. I'm not interested in these like low beta stocks. I don't really pay attention to it because there's not enough juice for me to trade, Let me see. Yeah. I mean, look at long term. Where's Pfizer been? Dead money. How long has it been sideways like this? Going back 3 years on Pfizer now. Yeah, look at that. I mean, dead money. Absolute dead money. You could have been in Pfizer for the last, I don't know, 3 years, 10 years. Horrible. There's 10 years. It's lower than 10 years ago. 10 years ago was 31. It's 25. What about it? I mean, this is loss of opportunity. This is just whatever. Nike was the same way, Tesla is the same way. Dead money last 4.5 years. This is longer than that. This is pretty ugly. Not my cup of tea, but hey, everybody's different. Yep. Okay. PFE. What about T? T as in AT&T? Speak clear. Many retail not looking good. I don't know. Retail is doing good, I think. Depends on what you're in. Okay. I already talked about sound. Okay. We'll take a look at T. Don't be that demanding, Michael Anthony. Let's take a look, and then we'll say goodbye. T. I mean, these stocks are not my thing, my cup of tea. Let's see. This is 1 year T. It looks complete opposite of Pfizer, doesn't it? At least it's in an uptrend as opposed to downtrend. 3 years. Yeah, beautiful. Nice uptrend. Again, not my cup of tea. I mean, I don't pay attention to these stocks. I haven't paid attention to these stocks for a long time. Never probably traded AT&T. We're talking trading, sir. It's an investment. Yeah, if you bought it at 14, 16, 18, great. Nice and slow and steady, although less than the market probably. Well, not necessarily, but this is 10-year telephone. Again, 10 years ago, same price, dead money. If you bought telephone 10 years ago and holding it, you're breaking even. Not my cup of tea, man. I'd rather be in NVIDIA. I'd rather be in Palantir. I'll talk about Palantir. I think that's making a new high today. Let's take a look at that one. You got to go where the growth is. These stocks are, whatever. Palantir, yep, new high today. And Hood, new high today, right? Yep, almost, yeah. Look at this. Look at these stocks and look at AT&T or Pfizer. Who cares about those two? Left for dead, really. Again, I'm not trying to be mean or rude or whatever, but reality, man. Reality. Well, everybody has to have a reality check once in a while. Anyhow, that's where we are. Doing well. See you guys tomorrow, hopefully. See? And then they come on and start arguing with you. PFE isn't dead money. They made 92 last earning. Who cares? Look at the stock price. Scoreboard. Okay. You know that, everybody knows that. I'm not arguing with you, but when you start arguing with me, you're not going to last here. PFE dead money, not dead money. Okay. Look at the stock price, bro. Yeah, all the stuff you say, everybody knows already. You're not the only one that knows this stuff. AT&T, but if you're not paying attention. Okay, last one. I said AT&T looks the opposite of Pfizer. It's still not my cup of tea, but it looks better than Pfizer for sure. So that's that. You're done, Michael Anthony. Anyway, okay, folks, I'll see you guys tomorrow with another edition of Trading with Sergio, Tuesday edition. We'll talk about a topic. We'll do the same thing, go through positions, answer some questions. Maybe we'll put an NUGT trade on. I like Lemonade here. I like Reddit here. They're all bouncing off support. I already talked about it. You need to go watch the show. I'm not going to repeat it. I post my positions. Whatever looks good to me is what I trade. So go follow the positions on the community page. It's on the YouTube channel. Full transparency every Monday, Wednesday, Friday. And if you do become a member, which I'm not sure you should, I post them every day. And I post my trades live. So, yep. Anyway, folks, you be healthy and stay safe. Make some money. We'll see you guys tomorrow.